So today's video I'm super excited about, and I've been nerding out behind the scenes with this. I'm rereading this book. It's called Invisible Influence: The Hidden Forces That Shape Behavior. And that's why I have titled this video, Why Better Human Understanding is the Future of Our Business. And I know we're in an AI obsessed world right now. Like, I don't know about you guys, but every time I get on a social platform or on Google, I'm getting all these AI prompt generating ads that are wanting me to buy this and buy that. And it's honestly created so much confusion. And although we have more apps than we've ever had, like I'm talking instant apps, it's the irony of the fact that we're less productive. Our work-life balance is horrendous. Shouldn't we be more efficient at this point? And so I started to really dive into data and how sometimes the things that we measure are not in true alignment of what matters most. And there's a lot of psychological value that is part of what I say. I know with a lot of you, when we've had discovery calls, I talk about the invisible metrics. Like, how do you measure impact? How do you really measure and quantify brand or love? And the challenge, especially with CMOs, and why we often butt heads with very logical, sometimes CFOs or chief of operations or even loan officers that are very logically driven, is that for some reason, if we can't quantify and measure numerical value, then we assume that there isn't value a lot of times, not all the time, but a lot of times. And so I really started to dive into this, like, what is it that makes people buy? And why, when you look at like the NAR data, why do so many choose to buy like literally miles down the road from where they currently are? And how many of those people who had, like, I think we assume a lot of times that people know they want to buy and they know what they're looking for and that they want it the fastest and the cheapest. When you peel the layers back, guys, and you do enough digging, and let me tell you, I dig, I have discovered that a lot of times people who had no interest in moving, like not a thought in the world, but they happen to be driving through the neighborhood on the weekend, they see an open house sign, it piques their interest. They walk into the home, and now all of a sudden they are either curious about buying, or now that seed has been planted and they start to take action and moving forward and possibly buying a home. And so I think we have to really stop and assess, one, what do our clients care about? And then where are the irrational, illogical points through a transaction that maybe instead of focusing on changing a process based off what we think is reality, but instead providing the psychological value that people often are seeking when it comes to buying a home. And so where do you start with all of this? It's really looking at where are the highest friction points when someone starts to dream. Like, we've got to back it all the way up to the dream of the vision of one day owning a home. What's the flood of thoughts that person thinks about? That's a first time home buyer. To then the home buyer who, maybe they're in their second or third home and they have 2 or 3 kids and they know that they're not in their forever home because they're in like the parenting era. So they needed a certain number of bedrooms and baths, and they know there's like a time horizon of when this home probably isn't going to be needed for their family. Maybe once their kids move out, whatever it could be. Like, what are the things that they start to consider and think about, and what delays the decision of possibly downsizing or right sizing or moving at that point? And then all the way up to when you look at all the different life events, like what happens when you inherit a home, or you are divorcing, or there is a death. I think we need to start thinking of value beyond just what can always be quantified and measured. And this goes to your tracking of your numbers even, because to me, not that you guys asked, but when people are like, what is a brand? In fact, we did a mortgage coach call about a brand around leadership, like a leadership brand. And to me, leadership is always when you inspire action, like positive, moving, like it's a collaborative, like we all believe in the same thing and we're inspired to create a movement. But a brand a lot of times can't be measured until time has occurred. So it could be that at the very start of your journey as a mortgage professional, you had to grind, like your hourly rate and the time that you had to spend grinding and prospecting and building out systems and process, and money possibly spent on ads and co-hosting events and co-sponsorships. And you may not have to spend as much time or ad spend to produce the same results because now you have a brand. Does that make sense? That's my definition of brand. And brand versus branding is different. Same with marketing versus branding versus selling. And you can be a lower than average salesperson with great marketing and sometimes get better results than the top salesperson who may be slickety slick, but is a horrible marketer. So I do think you have to have all three between just branding, marketing, and selling, along with understanding human psychology and like what actually gets people to buy. Like, why don't we measure human behavior? If people do things based off how they feel, because we know we like thoughts then dictate how we feel, based off how we feel then dictates what we do, and then based off what we do gets the results that we have. So if we want people to do different things, then we've got to get them to feel differently. So why do we not focus on the feelings of either home ownership or the value that we bring around perhaps that invisible influence that's difficult to measure, but yet could be like your biggest differentiator? So here were some initial thoughts that came to my mind that may sound counterintuitive, but I think that's where sometimes the biggest, most memorable brands, what they do well is they're not predictable. Because the more predictable you are, then that's more likely what everybody else is doing as well. Let me just go through some of the things that I had written down as my initial brainstorm. So this is not like perfectly polished yet, guys. This is just like my initial Deb thoughts. This is where I started. What are the fears that home buyers have that delay their interest of even maybe starting either the dream or the research journey of buying a home? And I have obviously financial commitment. So there's a lot of worry on taking on a bigger payment than maybe what they're used to, whether they're living for free with mom and dad or a little bit more than what they're used to with rent. And what if, because I think this is where a lot of us get paralyzed, is the what if syndrome. What if I lose my job? Or what if we break up? I fear this large commitment of a mortgage, which could hurt my credit. And it's just this huge responsibility that it would be too difficult to walk away from. So there's a concern of, a financial concern. Then there's obviously the market uncertainty. Like, what happens if interest rates get higher? Basically, am I buying at the right time? Like, how do we get people to feel secure that buying right now is the best decision for them? Like, what are all the things that would need to be true for it to make sense and for them to feel more certain about this uncertainty? I think the fact that the narrative around the complexity of getting the loan, and I say complexity because everything's so digital, like they don't know even how to maybe find their last 2 years tax returns or W-2s because maybe they changed jobs. And so everything is online with even their pay stubs that they don't, it's the friction of like logging into their payroll center and downloading their last, 30 days worth of pay stubs is like, it's insufficient information of not knowing what all is really needed. And then the qualification standards also seem very confusing to an outsider, because sometimes you may hear a video and they could be talking about an FHA loan. They could be talking about a conventional loan, which those are like Greek terms to somebody. And it just feels like everybody is talking about the same thing, but they're talking about it differently. Probably like how we feel when people try to predict what's going to happen with interest rates or what's going to happen with the housing markets. Like, you have all these really smart economists all predicting different things depending on where you listen and tune in from around the globe. So know that sometimes so much information can cause even more confusion, which then makes people paralyzed. So between just insufficient information, but also the credit and qualification concerns, I think the fear of being rejected for some people, like in their head, they think Maybe my financial history isn't enough, or maybe my credit score is too low. So I'm going to work on my credit. Like, it's all these fears that then also delay, because it could be painful. Rejection never feels good. Hitting costs and unexpected repairs. It does not help when we have fires going on in the world and just hurricanes, and you hear people talking about how costly insurance has gotten. And although these things are true, there's a lot of buyers who are very uncertain about not only being able to afford a home, but then what about these hidden costs or unexpected repairs that could happen, which for those of you who've been with me for a long time, you guys have heard my own personal journey with paying a contractor 80 grand that he then walked away with our money, and we were basically without our home that had been gutted. Whole long story, but our house was flooded and we got screwed bad. And that would have really sucked for someone who didn't have the financial means to pay that money twice. So those are things that rent space in their head. And I'm telling you guys all of this because this is where we can start to be a little bit more strategic with our messaging, where we are using these invisible influence triggers or these value points to cause some like relief, so that people can feel safe to dream again. Because I think we have 3 years of higher interest rates and lower inventory where people have either given up on the dream, they've stopped dreaming, they're not even showing signs of interest, like they may have completely given up, guys, and that frightens me. 2 more things that I want to hit on is the long-term commitment. I think especially the younger demographics, they fear the responsibility and just the limitations that come with owning a home and being fixed somewhere, because they still may not even know who they want to be when they grow up. That's why I don't think it's too shocking that the average first-time home buyer is now 38. Yeah, if you look at all the other variables tied to that, look at now what the average ages of a male and female getting married, of the birth of a first child, of how much the total debt is when someone graduates college, and how many people are graduating college with student loan debt. It's difficult for this generation, and they can't even, they're graduating with more student loan debt than they've ever had, and they could be making a little bit more income. But also you look at inflation and their inability to like realistically save, guys. Like they just don't know how it's ever gonna be in the cards for them. So they're having to wait, or they're even having their first kid and living in possibly an apartment. Can't imagine, The last one besides long-term commitment is the potential regret. Like they really fear making the wrong decision. Like, how do I know I will be happy? Does this sound familiar at all? Anyone who has like a niece or a family relative, or maybe yourself who's dating, you're like, but how do I know it's the one? And those are the messages where I'm like, maybe the first home doesn't have to be the one. It doesn't mean it has to check all the boxes. It's just, you got to test drive. You've got to maybe see what you like, what you don't like. How do you know if you never put yourself out there? This is now going to relationship mode, so I'll stop there. But I really have just gotten fascinated with the psychological value that could be perceived value as a way to be one of your biggest differentiators, and not blending in with what every darn loan officer is saying and posting. And how do we get back to perhaps being okay with the mess of not everything can be quantified? And sometimes the most genius, innovative ideas were only genius and innovative, like looking in hindsight. Because sometimes, like, I'm just thinking of like electric cars. There's people who may not want to take that leap of faith, and you don't know what you're missing out on until you take that leap of faith. And then there's enough of a social body who does it, where it's that then using social influence and FOMO of those who then go the electrical car route don't typically go back, which I find very interesting. So that's what we're going to go a little bit deeper on for all of March. Don't forget that March, it is coming up. Next week is our last week of February. March happens to be when the first day of spring is. We have spring break. It's kind of the start of spring home buying season. It's also when we have Mardi Gras and St. Patrick's Day, but also National Women's Month. So already be thinking of who are some people maybe within my organization or my business or my community of women that I want to honor. And maybe you could do like an interview series for March. But we're going to go deep into the psychological influences between the subconscious and the conscious mind, and how people really make decisions, because sometimes it's invisible. So get on this journey with me, guys. It'll be a fun one. All right. Y'all have a great weekend.